Hello everyone, welcome to Heart of Economy. Today we will offer more than a classic "Where is Bitcoin headed?" video. We will not only discuss price predictions, but also analyze in detail why Bitcoin has been stuck around the 100,000 level for weeks, how this stagnation is related to global macroeconomic dynamics, and the potential scenarios for the future. While doing this, we will focus on the perspective of Lyn Alden, who is known for her clear and data-driven analysis. This video is not investment advice. Our goal is to help you understand Bitcoin and the global macro picture within a clear framework, increase your personal financial awareness, and transparently analyze the dynamics behind price movements. Why are we explaining through Lyn Alden? Lyn Alden is one of the rare people who can explain complex macroeconomic relationships and Bitcoin's place in the global financial system in a clear and systematic manner. It is no coincidence that she is a frequent guest on channels like CNBC, Bloomberg, and Real Vision, because Lyn Alden explains liquidity cycles, monetary policies, and the reflections of the global debt crisis by relating them with historical data. She analyzes Bitcoin not only through price chart but also in the context of global capital flows, central bank monetary policies, inflation dynamics, and the impact of technological advancements. This strengthens the long-term perspective and helps individual investors make sound decisions. Today we will examine the following topics in a detailed and layered manner. Why has Bitcoin strengthened at $100,000? Is this strength a peak or silence before a breakout? Lyn Alden's 4-year cycle commentary and post-halving expectations. The global debt crisis, liquidity cycles, and their relationship with Bitcoin. The impact of ETFs, institutional demand, and supply construction. What on-chain data tells Lyn Alden. Technological advancements, energy bottlenecks, and inflation. Has the peak been reached? Lyn Alden's clear answer. Analysis summary and Heart of Economy perspective. Let's start. Why has Bitcoin strengthened at 100,000? According to Lyn Alden, Bitcoin's sideways movement around 100,000 for weeks is not a sign of weakness in the market but indication of a transitional period where global liquidity is searching for direction. Today, while global interest rates are being kept high for an extended period, the global debt burden is at historical peaks. Liquidity tightening pushes investors into a wait-and-see mode. The biggest obstacle to new capital inflows is the question of how much longer interest rates can remain high. We have seen Bitcoin move sideways for extended periods before rising in previous cycles. Around $3,000 in 2017. Around $10,000 in the 2020. Lyn Alden describes the situation as a breakout following a period of silence. Investors may find this period boring, but the biggest moves come after these patiently awaited periods of silence. Is stagnation a peak or accumulation? Many investors interpret Bitcoin's stance at these levels for a long time as a peak signal, while Lyn Alden argues the exact opposite. Staying at these levels for an extended period is an accumulation process where sellers gradually decrease and new buyers gather strength. Additionally, the global interest rate pressure is unsustainable. Rising interest burdens in the US and EU are eroding public budgets. Public debt burdens have exceeded sustainable levels. Inflation combined with low long-term growth increases the risk of stagflation. In this environment, central banks will again face pressure to lower interest rates and expand liquidity. When liquidity expansion begins, Bitcoin becomes one of the assets that react the most strongly due to its limited supply. The 4-year cycle and halving effect. Bitcoin's classic 4-year halving cycles have worked clearly so far. Sharp increases were observed after 2013, 17, and 21. However, Lyn Alden now states that the 4-year cycle is no longer the sole determinant. The 4-year cycle is not completely over, but it now intertwines with macro liquidity cycles to determine the price. Today, price movements are determined by global liquidity flows, central banks' balance sheet expansion decisions, institutional demand following ETF approvals, the support of capital inflows following the supply shock post-halving. Halving creates a supply shock, but what will rise the price is new capital inflows. The global debt crisis and liquidity cycles. There is over 315 trillion of debt worldwide, and debt to GDP ratios have exceeded 100% in the US, Japan, and the EU. One of Lyn Alden's strongest arguments is, this train doesn't stop. The system has to resort to new money printing, interest rate cuts, or accepting inflation. During this process, as fiat currencies lose their real value, limited supply, decentralized assets like Bitcoin come to the forefront as capital preservation tools. When liquidity expansion begins, Bitcoin responds with rapid and sharp price movements. The role of ETFs and institutional demand. Bitcoin's spot ETF approvals have enabled institutional investors to access Bitcoin directly. This demand is not short-term speculative but is held in long-term portfolios. ETFs withdraw supply from the market, limiting the potential for price declines. This reduces volatility while strengthening upward trends. Lyn Alden's emphasis is clear. Bitcoin is no longer an asset that only individual investors are interested in. It is now on the radar of large funds and pension portfolios. Signals given by on-chain data. In her analysis, Lyn Alden considers on-chain metrics such as MVRV, SOPR, and hodl waves. MVRV was in overbought territory during the 2017 and 21 peaks. Today it is at average levels. SOPR data indicates that profit takings has not yet started. Long-term holders are blocking supply by not moving their coins. This picture shows that the peak has not yet been reached and that Bitcoin's potential continues. Technological advancements, energy bottlenecks, and inflation. Lyn Alden states that technological advancements will not completely eliminate inflation, they will only determine in which area inflation will appear. If productivity increases and energy bottlenecks are resolved, consumer inflation will be limited. Liquidity will flow into asset prices. Scarce assets like Bitcoin will gain value. If productivity does not increase and energy bottlenecks continue, high inflation will be experienced in consumer prices. People will turn to scarce assets to preserve value. Bitcoin will again gain an advantageous position. Both scenarios work in Bitcoin's favor in the long term. Has the peak been reached? Lyn Alden clear answer. Lyn Alden answers this question clearly. Bitcoin has not yet reached its peak. The potential continues. The macro environment, on-chain data, ETF demand, and the global debt burden provide a suitable ground for Bitcoin to see new highs. He states that in the upcoming period, Bitcoin has the potential to rise by 30 to 50%, creating the space to take Bitcoin to the $150,000 level. Today, using Lyn Alden's clear and deep analysis, we have examined in detail why Bitcoin is stuck at $100,000 and how the situation is related to global macroeconomics. As Heart of Economy, we express this clearly. Bitcoin staying sideways at these levels is not a weakness, but an accumulation period where global liquidity is waiting for direction. Short-term volatile movements may occur. However, what will determine Bitcoin's price in the long term will be the deepening of the global debt crisis, the bottleneck in central banks' interest rate policies, the tendency for money supply to expand, Bitcoin's limited supply and increasing institutional demand. Bitcoin is not just a price movement. It is both an indicator and an active part of global macro changes. Our goal is not to provide you with a price prediction, but to present the macro picture in a clear and straightforward manner. If this analysis added value to you, don't forget to subscribe to the channel. This is Heart of Economy. See you in the next analysis. Stay informed, prepared, and strong.